Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, August 19th, 2021. Just wanted to do a quick update on the equity markets and highlight it just what a great example this is of why you two things. Number one, when you get a breakdown of support or a breakout above resistance, number one, you want it impulsive, and number two, you want to wait to see how the market opens. Pre-market trading is much lighter volume. What happens when the opening bell rings at 9:30? The big boys step onto the playing field. The starters, the institutions, hedge funds, those that are selling in large blocks, need the liquidity that the regular session provides. So that's why you take a pre-market session breakdown with a grain of salt. Now it was only a few minutes shortly before the open today, and we were trading below that levels, and the levels on NQ I was watching is 14,780, really 788 actually when you round that up, and there's a great example of it. So that's where we were just before the open, but by the time we opened, there's our opening candle right there, the first candle of the day. Boom, shot right back above it. And this is also what happens when there is a whipsaw. Now again, that's why I kind of throw out conditionals. I wait for a solid 60-minute close or an impulsive breakdown below, and I like to see it in the regular session, especially if it occurs, just before the market opens, and that's where we were trading right there. And so what happens is those that took it now, because it's to me it's a well-defined level, key support level. So those that shorted it are getting squeezed out because once they see that the breakdown did not stick or in my case didn't materialize, they then have to cover those positions, and it allows, of course, the high frequency trader to step in front of those trades, and that's what it looks like. So nothing's changed. That remains, as said this morning, we have sell signals pending a break of these levels, solid break, especially, we want to see a close, 60-minute candle close during the regular trading session, and we don't have that. So we're back to where we started, and the sell signal remains pending on QQQ. This is what it looks like. Same thing, little trading below there in the pre-market session, and then boom, once the market opened, they rifled it right back up there to get it above that level right there, the bottom of the line. So that's it. This does remain a key support zone, so you want to see that bottom of that zone taken out. I gave you minor support right there this morning, about 358.35. That's why I colored a different color. It's not solid support. And these are all the potential targets where reactions likely if and when we get that sell signal anytime soon. And if we don't get it anytime soon, it all depends on how high we go, where the next targets will be for the next downside. But as of now, here it is. We remain in the multi-week trading range right there, and we need to break above it or below it. And any break anytime soon above it is still not going to change the technical posture of the markets, again, anytime soon, and being a marginal high. Those are the conditionals. If you break it and you keep going, you can burn and will burn through the divergences. But if you just pop it barely and it's a marginal new high, the divergences will remain intact. So that's it. Same outlook. Sell signals remains still pending on the equity markets, and that's the same story. Yesterday I highlighted a couple new trade ideas. I looked at lean hogs and live cattle, and same thing. This is what a trade setup is different from an actionable trade. So there was our downtrend line, our little wedge pattern, and this is where we were. And so we're still pending a buy signal on lean hogs, and that would take us up to, again, the targets are highlighted yesterday. And I think, as I mentioned, if we get rejected there and we thrust down, it's not going to change the technical posture. We're currently this is a bullish setup, but not an actionable or live trade. And if we do go down, even within the wedge, make a new low, as long as we keep these divergences, I'll continue to keep this on my radar and consider it a long trade setup. And I'll tell you what, if we get down to the bottom of that level, there's a difference between a buy signal and an objective entry. So an objective entry in this case would be a buy signal, of course, a breakout, as well as a pullback down to this level here. Let me give you a line on that one, just in case we get there. If we get down, usually what you're going to see if you come down to it, I would favor, again, if we get very close to it, probably a pop down below to clear out any stops and then a reversal. That just tends to be what happens most of the time. In doing so, would like I said, it would just simply extend the divergences. But sometimes you hit that level exactly and the buyers step in. So bottom line is you could go long there at 80 on or around or coming up to 83.53-ish right there, and or down to this level with a stop somewhat below it. You just want to keep, again, the divergences intact. And I'll have to study this on the daily time frame to see if we have any better support down in this area here, but that's my thought process. So to reiterate, objective long entry there, although that one is more of an aggressive, what I call anticipatory entry, anticipating a breakout that's not yet occurred. So maybe a half position there, and if it starts to play out and you reverse and then you do break out, then you add the other half, take it to a full position. And the benefit there is, although it's more aggressive, meaning you have a lower probability of success on the trade than waiting for a breakout, you have a better entry price, so that kind of offsets it. And again, you keep your stops a little tighter there. And you could also lower your average cost if you are going to take a breakout by taking your first half there. And then the other one was live cattle, and those were lean hogs, live cattle. Same story. It's still a trade setup. Pending a buy signal or breakout, which is again above the triangle pattern, and or meaning you can take the triangle pattern, but you may get checked by that 129.78 resistance. So you want to be safe. You wait for a breakout above, or you do a little of both, maybe a half a position on the breakout above the triangle, especially if it's impulsive, and the other half above 129.78. And stop would be somewhere below there. You could probably take that trend line, and I'll do it now, and modify it a little bit and come in and catch the bottom of this candle right here and this one, and that would look like this. So this would be an ideal place for a stop just below that trend line there. And it's tight. That's the nice thing about this guy here, this pattern, this setup. It's you're pinching towards the apex of that triangle pattern, where the two lines come together. And so it's going to break one way or the other. It has to sooner or later. Now it could just kind of fizzle out and keep trading around, and then you no longer have a triangle once you've crossed above and through the triangle like that. But again, this is the most likely scenario there. And I mentioned yesterday, if you don't trade futures, the one ETN that I'm aware of that would hold both of those, cattle and hogs, is this cow, symbol COW, livestock ETN, and you can see the levels here. This is a daily chart. You have a nice trend line that it's just coming off of. Upside, we don't have a clear downtrend. That's the triangle right there if you want to replicate it here on this daily chart. It's the best I could give you as far as resistance. And then first resistance level there, it's a minor resistance, about 39.13, and then 40.62. And then ultimately I have a target up there, an upside target of 44.36. And like everything else, turn off all the lines, and this is another commodity, or at least a combination of two commodities that's still in an uptrend. Lately, it's been slowing down, kind of trading sideways a bit, and this is either just a consolidation within a trend. So if we could break to the upside, most likely a resumption of the trend. If you break to the downside, well, that's not going to be good, and that's what stops are for. And then finally, we'll keep this video brief, just highlight some of the trade ideas that were highlighted yesterday, as well as that update on the markets I gave you. So on natural gas, remember yesterday we hit the trend line price target, the downtrend line. There was a sell signal back here. It triggered when we broke down, and that was a trend line I was targeting right there was hit. And I did mention there was support just below in case we punched through the trend line. You had pretty decent support, which we still do here. So the same case could be made for a long entry. Although we did break the trend line, but we, as I said, you want to put a stop somewhat below that 3,743. So that one still has the potential to go. I'm not crazy about it breaking the trend line, but if you're in it, I would certainly give it a little more room under today's lows. And these divergences may still yet play out. And if so, it could be quite bullish if it can snap back above the trend line, because those that saw the trend line break and shorted it would be caught, just like in the markets today if you jumped the gun early. And again, that's why I would never have shorted this on a break of the trend line with pretty solid support right here at the top of that trading range just below, because those are the types of whipsaws that some don't see. Again, if you're looking only at the trend line and you're not paying attention to other things such as horizontal price support. So that's that. Still has some potential to go, but again, you don't want to give it too much more room, because if it breaks that, it's clearly below the trend line, and it will also have taken out that 374 support. And then, of course, there's that crude update. Since I was doing natural gas, I'll just update crude, also because it hit the target today, but I gave a post this morning, so there it is. T1 hit. As usual, there's a reaction so far. You have to zoom in so tight. Look how tight that reaction is, right on that 2158 first target there. You can see it's a doji candlestick, meaning we popped it. We've been trading on that level all day pretty much, and that's typical. So if you're an active trader or a quick trader, you can book profits there depending on where you got in. I started mentioning crude really at the highs recently. It was where on crude futures, and that correlates with the high on crude futures. So far, if you shorted crude there or bought this ETF or ETN, that you're up about 30% in just a couple weeks. And again, whether or not reaction I define as a consolidation and or a reversal off that level. Hard to say whether we're going to get a reversal, but whether we do or not. Again, I'm speaking now wearing my swing trader hat, trend trader. It doesn't matter. This one I still think there's more upside, minor squiggles aside. Sometimes I can do a pretty darn good job of calling those squiggles, and that's where I post the 60-minute charts, particularly of crude futures. And then, if you're not an active trader, you don't have the time, inclination, or whatever to do that, then just stick tight. And I just gave you a little uptrend line there that may come into play, and so you can use that for two purposes. You could use a stop somewhat below that trend line, ideally on a daily closing basis. You could also use that trend line if you get a pullback in SCO to add to your position or recycle back in. Let's just say, for example, you took profits there expecting a pullback. So that's SCO, but again, my preference is to sit tight. I think there's more downside to come, and at this point in time, early on, as you guys know, I was more actively trading and more apt to, posting all these bounce backs and objective shorting ops like there was a divergent high, the sell signal 1, sell signal 2. We hit the support there, had positive divergence, set up this little wedge. There was another sell signal, time to get back out any longs. When we hit that, I mentioned we're going to probably have a bounce, that it was an objective time to play a cover short, get a bounce out of the trade, gave you a rough target, which was slightly exceeded, and then boom, said next time we take that out, it'll probably be it, because we've already checked that level twice, and we took it out, and you can see that's impulsive. So now where do we go from here? Sort of on this chart, at least 60-minute chart, in no man's land, so your guess is as good as mine, but we could get a kickback to, and if we do, it would be objective to short or add on 64.89 or that downtrend line. Either or both of those would be objective levels, maybe as much to 66.05. And so there's a decent chance that we get there, but I'd say under 50%. I think once this breaks, I think most eyes now, if they were thinking these were all buying opportunities, buy the dip, and what happens is you keep buying the dip at lower and lower levels. Finally, you realize, guess what? Crude's no longer in an uptrend, it's in a downtrend. So I've been buying the dip all along, digging myself in a bigger hole, and that's usually what happens. I call it the POR, point of recognition, where dip buyers realize, ruh-roh, something's going on here. I keep buying these dips, but I keep getting in a deeper and deeper hole, and that's where you usually get those the bigger drops, more impulsive. As impulsive as that drop was and that one, we could have an even much bigger drop in crude coming up, and especially, and I'll wrap it up here, just to loop back to where we began, if and when the market breaks, which is those levels I gave you on QQQ. Well, that's the daily chart there. I gave it that to you earlier. SPY, of course, as well. 60-minute chart. Here's what it looks like. Oh, that's interesting. I didn't even cover that. I gave you these lines. I color-coded them purple recently. I've been highlighting them for the last few weeks, saying that these levels, the purple lines, really obviously the lower of the two, it's a support zone, but you have to take out that support zone. And look at that. We hit the bottom. Again, I haven't even touched these lines. came down to a low of 436.12 versus that line at 435.93. So you're talking, what is that, 19 cents on a $436 security. You're talking a fraction percent. So that's effectively almost a perfect tag of that level right there. And it's basically a pullback to support. So the dip buyers stepped in, just like they did on crude. They stepped in each time crude hit that level until about the third time. So I do believe the next time around we get even close and we may bypass it on a gap. But the next time we get down there, I would expect that it would break. And again, you have targets here on the 60-minute chart, some near-term targets to look at, which is, let me just highlight these and then I'll end the video. 431.16, maybe go a little lower. I think that number should be about, we'll call it 431. I'm going to just make it easy and round it off. Again, you always want to cover a little bit above support anyway, in case the buyers step in early, if that's a level you're targeting. So we'll call that 431. I've got 436 even right there, and 422.63, which probably could go down below that, right about 422. So yeah, let's keep all these simple because that's close enough. There it is. All right, there are your targets for SPY: 431, 426, and 422. But again, it is a trade setup. It is a short trade pending an entry, and that entry would come on a break below 435.93 or a solid close below 436. We'll call it either intraday, big 60-minute candle close, gap down, or a daily close if you want to be extra safe, since it's been a resilient trend. And should that occur, I think there's a lot of hot air right now in the market. We could get down there very quickly, and if we do, I'll update it with additional targets. Actually, I have some on here now about 411 and then 405. I just want to throw those out in case I don't get to adding some additional targets before then. All right, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. And obviously, if we get anything big before the close today, I'll do another update on the markets. And if I come across any other the recently highlighted trade ideas that stand out, I don't see many right now worth updating, I'll also do a follow-up post, get a post out to you guys or a video.